Welcome to our deep dive. We're taking a look at One Up on Wall Street.
Oh, a classic.
It really is.
Yeah.
Written by Peter Lynch
Of course, a legend on Wall Street.
and John Rothschild.
A fantastic storyteller.
And, this book, it's considered like a must-read for anybody who's interested in investing, right?
Absolutely. And especially, for our listeners, those who are really into stock books.
Yeah. And have some knowledge. So this is going to be fun. Let's uncover some of those hidden gems.
Sounds good.
So Lynch's whole approach is about empowering those everyday investors.
That's right.
And he says, you don't need to be like a financial wizard.
Yeah, I like that.
You can use your own experience
That's right.
to make smart choices when it comes to investments. Now, the book, it kind of kicks off with his journey through the history of capitalism.
Yeah.
And he calls it like the dawn of capitalism.
Yeah.
Why do you think he starts off with this historical context?
Well, I think it's really clever how he does that, because by showing how new this concept of capitalism is, he emphasizes that it's always evolving.
Okay.
And he uses the Dutch West India Company, those real estate pioneers in early New York, to show how early investments shape the future. And then there's the captivating tale of the Pilgrims.
The Pilgrims, yes.
Who faced serious struggles, even with their unique agreement with investors.
Right. It wasn't smooth sailing for them, was it?
Not at all. Remember how their investor, Weston, changed the terms of their agreement?
Oh, yeah.
Last minute?
Uh-huh.
Suddenly they're working 6 days a week just to make ends meet.
Right.
Their story underscores a critical point Lynch makes. Sound financial planning, it's essential no matter what era you're in.
I mean, the lesson is relevant today as it was back then. Okay, so from those early ventures, we're taken through this evolution of the stock market, and we're kind of given these bubbles, like the Mississippi bubble,
Right.
South Sea bubble. Why focus on these cautionary tales?
Well, I think it's really about setting the stage for his core investment philosophy.
Okay.
These bubbles were fueled by speculation and a disconnect from the underlying value of investments.
Ah.
Lynch constantly reminds us, invest in what you know. And understanding these pitfalls is crucial for avoiding those similar mistakes
That makes sense.
today. He even points out that the New York Stock Exchange was once considered quite dull.
The New York Stock Exchange. Dull.
Can you imagine that?
No, not at all.
It speaks to the dramatic transformation the market has undergone.
Yeah. And how those perceptions, they can change, right? Okay, so from the historical context, he takes us through the American Industrial Revolution.
Right.
We see companies like Rhodes and Sons,
Yeah.
Dexter Company.
Uh-huh.
They're adapting to these changing times.
They are.
Yeah. What's he trying to emphasize here?
Well, these stories really showcase Lynch's emphasis on adaptability
Okay.
and innovation. Rhodes and Sons, they shifted from buggy whips to conveyor belts.
Oh, wow.
Dexter Company went from a mill to producing everything from coated paper to get this high-performance coatings for aircraft.
They really were like constantly reinventing themselves.
Yeah.
What I find really striking is that he doesn't shy away from the complexities of this era.
Mm-hmm.
He even touches on the debates surrounding the role of banks in the early American economy.
That's right.
Like, how does he approach that?
Well, he brings up the contrasting views of Alexander Hamilton and Thomas Jefferson.
Oh, okay.
And he's highlighting this ongoing tension, right, between centralized financial power and then individual economic freedom.
It's something that investors should always be aware of.
Absolutely.
It's about understanding those forces shaping the market. Okay,
Yeah.
From these foundational shifts, we then go into this rise of these national brands like Nabisco,
Yeah.
Heinz,
Yeah.
Quaker Oats. How did these brands revolutionize that consumer landscape?
They brought consistency and quality to a market that was previously fragmented. Think about the captivating story of the first supermarket, evolving from a simple tea shop in New York.
Wow.
And it completely reshaped how people shopped, offering convenience and a wider variety of goods all in one place.
So fascinating to see how these, what seem like small innovations,
Yeah.
have such a huge impact.
Huge.
And then the mail order boom with Sears, Roebuck and Company,
Oh, yeah.
expanding consumerism beyond urban centers. It's a testament to how businesses can really leverage innovation to reach new customers.
Yeah.
But even with all this growth, all this innovation, he reminds us of that cyclical nature of markets.
Yes.
He brings up the Great Depression.
Yes, he does.
And he debunks some of the myths surrounding it.
Yes.
Why is that important?
Well, it's crucial to separate fact from fiction, especially when understanding market crashes.
Okay.
Now, while the Great Depression was a time of immense hardship, Lynch reminds us that those widespread suicides by stockbrokers jumping from windows, well, it's a myth.
It's a myth. Okay.
And he emphasizes the importance of sound government intervention.
Okay.
and financial regulations to mitigate those future crises.
So that period really highlights the need for a balanced approach to markets, right?
Yeah.
Regulations are there to protect investors,
Right.
ensure stability. And from this historical perspective, he then introduces this key concept, long-term investing.
Yes.
And he uses this anecdote of Susie Fiffig and Frank Grosskopf
Oh, that's a great one.
to illustrate his point.
Yeah.
Right.
Susie diligently invests a small portion of her income every month,
Okay.
and she ends up financially secure. Fran, on the other hand, spends freely
Uh-oh.
and ends up, well, lagging behind.
Right. So it's this powerful lesson, the magic of compounding.
That's it.
Consistent investing, even if it's small amounts,
Yeah.
can lead to significant wealth accumulation
Over time.
over time. A message that resonates with everyone, really, regardless of their income level.
Absolutely.
Now, for those who might not be comfortable picking individual stocks, Lynch introduces the world of investment funds.
Yeah.
Right?
Yeah.
What's the benefit there?
Well, they offer a way to diversify those investments
Okay.
and potentially mitigate risk. Lynch even provides some tips on choosing the right funds,
Oh, perfect.
emphasizing research, due diligence, and a long-term commitment.
It's about aligning your investment goals with a portfolio that reflects your risk tolerance.
And your time horizon.
So we've covered the historical context, the importance of that long-term investing
Right.
and those investment funds.
Uh-huh.
What's next in Lynch's roadmap to successful investing?
Well, this is where it gets really exciting. He introduces what he calls the investor's edge. And this is where he urges us to find investment opportunities in our everyday lives.
Oh, interesting.
He believes that our personal observations and experiences provide valuable insights
Okay.
into those potential investment prospects.
That's what he calls local knowledge.
Exactly.
Right.
Yeah.
That's such a fascinating concept.
Yeah.
Can you give us some concrete examples of how this can be applied?
Sure. Imagine you notice a new coffee shop in your neighborhood.
Okay.
It's always packed, lines out the door every morning. That could be a sign of a successful business
Makes sense.
with growth potential. Or maybe you notice a local retailer is expanding rapidly,
Okay.
opening new stores in different locations. That's another potential indicator of a company on the rise.
So it's about connecting the dots between our own experiences
Right.
and those companies that are meeting those needs,
Exactly.
capitalizing on those trends. That's really powerful.
It is.
It empowers us to leverage those unique perspectives.
Yeah.
But Lynch doesn't just leave us with these vague notions of observation, right?
No, he does.
He dives into understanding company performance.
That's right. He guides us through those key financial metrics like the PE ratio,
Okay.
the debt to equity ratio,
Okay.
and the return on equity.
And these ratios, they can be intimidating, but what do they really tell us?
They offer valuable insights into a company's financial health,
Okay.
profitability,
Yeah.
and growth potential.
But how do we actually use them? Can you give us a practical example of how to interpret them?
Sure. Let's take the PE ratio, for example.
Okay.
It tells us how much investors are willing to pay
Okay.
for every dollar of a company's earnings.
Okay.
Now, a high PE ratio, that can indicate that investors are optimistic about the company's future.
But it could also mean that the stock is overpriced. Right?
Exactly. So it's all about context.
Okay.
And that's where Lynch's guidance comes in. He teaches us to analyze those numbers in relation to industry averages
Okay.
and historical trends.
He also stresses the importance of going beyond the numbers
Yes.
and reading company annual reports,
Yes, absolutely.
which can seem daunting. Right.
They can. But annual reports, they contain a wealth of information about a company's operations, their financials, and their strategic direction.
It's just about understanding the story behind those numbers.
Exactly.
Okay. And that brings us to the next stage in Lynch's framework, understanding the life cycle of a company.
Right. He walks us through those various stages
Okay.
from the initial public offering, or IPO,
Okay.
to potential mergers and acquisitions.
So it's about recognizing the signs of a growing company,
Yes.
spotting those potential pitfalls
Yeah.
of investing in declining industries,
Right.
and understanding how these companies evolve
Over time. Exactly.
over time.
Yeah. He uses compelling examples like Apple Computer, Coca-Cola, and Ben & Jerry's
Oh, great example.
to illustrate the different trajectories companies can take.
Right.
For instance, the story of Apple highlights those challenges of sustaining rapid growth
Right.
and adapting to evolving market dynamics.
Right. It's a reminder that even the most innovative companies,
Uh-huh.
they can falter if they fail to anticipate and respond to those changing consumer demands.
That's right.
Now, speaking of changing demands, Lynch doesn't shy away from addressing the complexities of corporate takeovers.
No, he doesn't.
He explores the motivations behind these acquisitions
Yeah.
and their potential impact on both the acquiring and acquired companies.
Okay.
Takeovers, I mean, they can be driven by a variety of factors.
They can.
Expanding market share, acquiring new technologies, or even just eliminating the competition.
Yeah.
But how can investors make sense of these corporate maneuvers?
Well, Lynch points out that while some takeovers can create value for shareholders, others can be driven by ego or short-term financial gains. He uses Philip Morris's acquisition of Kraft to illustrate how companies can use acquisitions to diversify their product portfolios
Okay.
and enter new markets. It transformed Philip Morris from a tobacco company into a diversified food and beverage giant.
It's a classic example of how companies can reshape their businesses,
Right.
adapt to those evolving consumer preferences,
Mm-hmm.
and then there are conglomerates, those sprawling corporations that own a diverse range of businesses, often with little connection to each other.
Yes.
Lynch highlights the rise and fall of companies like Gulf and Western, ITT, and U.S. Industries.
Yes, they grew rapidly through acquisitions, but often struggled to manage those sprawling operations.
So it's a reminder that bigger isn't always better.
Right.
And focusing on those core competencies and strategic acquisitions can be more effective.
Mm.
And on the other end of the spectrum, he talks about Ben & Jerry's,
Oh, yeah.
a company that rose from, those humble beginnings
Yes.
to become this national ice cream brand.
It's the quintessential American success story.
Two hippies turn a $5 ice cream making course into a multi-million-dollar enterprise.
It's amazing. It's a testament to the power of entrepreneurship, but Lynch also highlights those challenges Ben & Jerry's faced.
Oh, right. Yeah.
As consumer preferences shifted,
Yeah.
it's a reminder that even companies with strong brands need to evolve with the times.
So we've explored the life cycle of companies,
Yes.
the dynamics of those takeovers,
Mm-hmm.
and that importance of adapting to those changing consumer preferences. What are some of the broader economic trends that he highlights?
Well, he then shifts his focus to the enduring power of the American entrepreneurial spirit,
Okay.
showcasing those stories of individuals like Bill Gates, the co-founder of Microsoft, and Warren Buffett, the legendary investor.
Individuals who rose from humble beginnings to become giants in their respective fields.
Exactly. And their stories underscore the dynamism and resilience of the American economy.
But he doesn't just focus on the tech giants and financial titans. He also highlights individuals like Roberto Goizueta, who transformed Coca-Cola into a global powerhouse, and Ross Perot, who built a successful technology services company from scratch.
That's right.
So these diverse stories really showcase the breadth and depth of the American entrepreneurial spirit,
Absolutely.
demonstrating those opportunities that exist across a wide range of industries
Yeah.
and sectors. He really emphasizes the fact that the American economy is constantly evolving,
Right.
with new industries emerging,
Yeah.
old industries adapting to those new realities.
Mm.
He points to the resurgence of the American auto industry,
Yeah.
which, after facing stiff competition, reinvented itself. It's a testament to the resilience of American businesses
Right.
and their ability to adapt to those changing market conditions.
Absolutely. And he acknowledges that crucial role of government policies in fostering a favorable environment for business growth.
He advocates for a balanced approach that recognizes both the power of free markets and the need for government intervention to address market failures and promote economic stability.
Yeah.
It's a nuanced perspective that recognizes the complexities of the modern economy
Right.
and the need for those thoughtful policies that support both businesses and workers. And speaking of workers, Lynch addresses the issue of job losses, particularly in large corporations, often attributed to automation, globalization, and that relentless pursuit of efficiency.
Yes, he does. He acknowledges the pain and disruption that job losses can cause,
Okay.
but also emphasizes that importance of adapting to those changing economic realities and investing in education and training to prepare workers for the jobs of the future.
It's a reminder that the economy is this dynamic system, constantly evolving,
Yeah.
creating new opportunities.
Mm.
Now, with all this talk of challenges, opportunities, how does Lynch ultimately view the future of the American economy?
Well, that's where the book takes a really inspiring turn. He concludes with a resounding message of optimism
Okay.
about the future of the American economy. He believes that the spirit of innovation, entrepreneurship, and hard work, That's what's driven American prosperity for centuries.
Yeah.
And it's still alive.
It's a really uplifting message, especially in today's uncertain times.
It is.
So he wants us to embrace those challenges,
Yeah.
to invest in ourselves, our communities, and the future of the American dream. But he doesn't just leave us with this feel-good message.
No.
He provides some practical advice.
Yes, he does, right?
For those looking to take control of their finances
Yeah.
and build long-term wealth.
That's right. He encourages readers to develop a disciplined approach to saving and investing, starting early and sticking to a plan.
So we've covered a lot of ground here, from that history of capitalism to the nuances of financial metrics and the importance of that long-term investing. Where do we go from here? What's next in our exploration of Lynch's investment philosophy?
Well, now that we've laid the groundwork, we can dive into the practical application of Lynch's principles.
Oh, okay.
He dedicates a significant portion of his book to providing specific tips for researching companies, identifying promising investment opportunities, and building a winning portfolio.
Well, that's what we're all here for, right?
Yeah.
Actionable insights help us become more informed
Uh-huh.
and successful investors.
Absolutely.
And that's what we're going to do. Stay tuned, listeners, for part 2 of our deep dive into One Up on Wall Street. We've got a lot more to uncover.
Welcome back to our deep dive into Peterlynch's One Up on Wall Street.
We're back.
We've laid that groundwork, explored his investment philosophy, the historical context. Now let's get into those practical strategies.
Yeah, let's do it.
For researching companies and identifying those promising opportunities.
All right.
You know, one of the things that struck me
Yeah.
about Lynch's approach is his emphasis on storytelling.
Yeah, he's a great storyteller.
He uses these captivating anecdotes to drive home those investment principles.
Right.
Like the tale of the Woomer Band.
The Woomer Band.
And their quest for this high-powered amplifier.
Oh, yeah.
It's such a clever way to explain the concept of profit
Goes.
and company ownership.
Okay.
Imagine you're approached by the band's guitarist,
Okay.
desperate for a new amp.
Okay.
He offers you a 10% ownership stake in the band
Okay.
in exchange for a $1,000 investment.
All right, so I'm a part owner.
You are.
Okay.
Initially, it seems risky, right?
Yeah, a little bit.
Their only asset is this amp
Right.
you just financed.
That I just financed. Okay.
But if the band starts gaining popularity,
Okay.
selling out shows,
Mhm.
generating profits,
They're making money.
your investment starts to look a lot more appealing.
More appealing, yeah.
And if they really take off,
Yes.
signing a record deal,
Oh,
selling millions of albums, going on world tours,
War tour.
that 10% stake could be a gold mine.
A gold mine, okay.
It's a simplified illustration,
Yeah.
but it perfectly captures the idea that investing in a company
Yeah.
is essentially buying a piece of its future earnings
Right.
potential.
Okay.
And just like with the Wummer Band,
Uh-huh.
there's no guarantee of success.
Of course.
Some bands fade into obscurity
Right.
while others become legends.
Okay.
The same applies to companies.
Right.
Some thrive,
Yeah.
others falter.
Makes sense.
That's why analyzing a company's performance,
Okay.
going beyond the hype,
Yeah.
understanding those fundamentals is crucial.
So important. So then that's where those financial metrics
That's right.
come into play, right?
Yes.
The PE ratio, debt to equity ratio,
Uh-huh.
return on equity.
Exactly.
Lynch kind of guides us through these,
He does.
helps us decode those sometimes intimidating numbers.
I know they can be a little scary.
Yeah, they can.
These ratios offer a snapshot
Okay.
of a company's financial health,
Yeah, okay.
profitability, and
Right.
growth potential.
And we have to analyze them,
That's right.
not just in isolation, but in comparison, right?
Exactly. Comparing them to industry averages,
Okay.
historical trends.
Right.
And he also reminds us that a high PE ratio,
Right.
often seen as a sign of, investor excitement,
Yeah.
it doesn't always tell the whole story.
Okay.
Exactly. It could also mean that the stock is overpriced.
Oh, okay.
Right.
Yeah.
So we need to consider qualitative factors too.
Okay.
The management team,
Right.
competitive landscape, the industry outlook.
So it's more than just
It's the whole picture.
the numbers.
Yes.
Okay.
And Lynch provides these great real-world examples
Yeah, I like that about him.
to illustrate this,
Yeah.
focusing on companies like Nike
Nike, yeah.
and Johnson & Johnson.
Okay. Those are good ones.
Nike, with its straightforward business of athletic shoes,
Yeah.
most people can easily grasp that,
Right.
right?
Yeah.
And he uses it to demonstrate how to analyze
Okay.
a company's growth prospects
Okay.
by looking at those sales trends,
Okay.
profit margins, and market share.
Market share.
He points out that even when Nike faced declining profits
Right.
in the late 1980s,
Uh-huh.
it still held a very strong financial position
Right.
because of its powerful brand,
Right.
efficient operations,
Yeah.
and substantial cash reserves.
So even though their profits were declining,
Uh-huh.
they were still in a good position overall.
Exactly. They had those strong fundamentals.
Okay.
And that's a great example of how even when a company encounters those short-term challenges,
Okay.
it can still be a very solid long-term investment
Vodka.
if those underlying fundamentals are strong.
So important.
And then there's Johnson &
That's
Johnson,
Johnson & Johnson, yeah.
known for their diverse product portfolio.
Strong brand recognition
Yeah.
and those consistent dividend payments.
So they're considered like a blue chip stock.
Yes, a reliable performer
Yeah.
in many portfolios.
Okay.
Lynch highlights Johnson & Johnson's impressive track record.
Uh-huh.
Profitability, innovation, financial strength.
Okay.
It's a company that successfully navigated
Wow.
multiple economic cycles and those industry shifts.
So many changes.
Right. And he delves into their annual report,
Okay.
revealing insights into their research and development spending,
Oh, wow.
international operations,
Okay.
and long-term growth strategy.
So he really likes to use those annual reports
He does.
to kind of get those insights.
He says they're often overlooked,
Yeah.
but they can be a treasure trove
Treasure trove.
of information
Okay.
for investors willing to decipher them.
All right. So now shifting from
Yes.
individual companies to their broader life cycles.
Exactly.
Lynch guides us through these various stages from their IPO.
To potential mergers
Yeah.
and acquisitions.
Right. He stresses recognizing those signs of a growing company,
Okay.
expanding markets, innovative products, and increasing profits.
So those are all good things.
All good signs.
Good signs, okay.
And he also cautions against investing in those declining industries
Okay.
where companies struggle to adapt
Right.
to those changing consumer preferences or technological advancements.
Technology, right?
He uses diverse examples
Yeah.
to illustrate this.
Okay.
Apple Computer's story is a cautionary tale
Oh, really?
about those challenges of maintaining that rapid growth
Wow.
and the importance of adapting to those evolving market dynamics.
Got to keep up with the times,
You do.
right?
Absolutely.
Even the most innovative companies can stumble if they fail to anticipate and respond to those changing consumer demands.
That's right.
Then there's the world of corporate takeovers. Lynch explores the motivations behind these acquisitions.
He does.
And their potential impact on both the acquiring and acquired companies.
Yes, and he points out that while some takeovers
Yeah.
can create value for shareholders,
Uh-huh.
others can be driven by ego or short-term gains.
So not always a good thing.
Not always, no.
Okay.
And it can be very difficult to assess
Right.
whether a takeover will ultimately benefit those investors.
So what do we do?
Well, that's why understanding the strategic rationale
Okay.
behind these moves is so important.
Okay.
And Lynch uses the example of Philip Morris
Oh, yeah.
and their acquisition of Kraft
Okay.
to illustrate how companies can use acquisitions to diversify their portfolios and enter new markets.
Enter new markets.
It transformed Philip Morris from a tobacco company into a diversified food and beverage giant.
Wow, that's a big shift.
Isn't it?
Yeah.
They really reshaped their business and adapted to those evolving consumer preferences.
It's a great example of that.
It is.
Now, speaking of growth,
Yes.
Lynch also delves into the world of conglomerates.
Oh, yes.
Those sprawling corporations
Yes.
with a diverse range of businesses,
That's right.
often with little connection to each other.
It can be hard to manage, right?
Seems like it would be.
Yeah.
Yeah.
And he highlights the rise and fall of companies like Gulf and Western, ITT, and U.S. Industries.
Okay.
They initially grew rapidly
Okay.
through acquisitions,
Okay.
but often struggled to manage those sprawling operations and create value for shareholders.
Yeah, it seems counterintuitive, but sometimes bigger isn't better.
You got it.
Right.
It's about focus.
Focusing on those core competencies
On the act.
and those strategic acquisitions
Right.
can be much more effective
That.
than simply amassing a collection
Yes.
of unrelated businesses.
That's a great point.
Okay. And to illustrate that point further.
Right. He contrasts those conglomerates with the story of Ben & Jerry's.
Oh, yes, a classic.
A company that rose from those humble beginnings
Yes, humble beginning.
to become this beloved national brand.
I love their ice cream.
It's a classic story of American entrepreneurship,
It is.
fueled by passion,
Yes.
innovation, and a commitment to quality.
They had a unique corporate culture,
Yeah.
a commitment to social responsibility,
Uh-huh.
and those innovative product offerings.
Right.
It's an example of how companies can differentiate themselves.
Yeah, in a crowded market
Yes.
and build that loyal following.
Exactly.
But he also acknowledges those challenges they faced
Right.
as consumer preferences shifted toward healthier options.
Right.
Right.
That's right.
Forcing them to adapt their product line
Yeah.
to stay competitive.
Absolutely.
It's a reminder that even companies with those strong brands and loyal customers, they need to evolve with the times.
To remain relevant.
To stay in the game.
Yeah.
Right.
Okay, so we've covered a lot of ground here.
We have.
From analyzing individual companies to understanding those broader life cycles.
Right.
The dynamics of those corporate acquisitions. What's next in Lynch's roadmap
Well, now
for successful investing?
Lynch shifts his focus to that broader economic landscape
Okay.
and the individuals who shape it.
The individual.
Yeah, he showcases the stories of these entrepreneurs
Okay.
who rose from those humble beginnings
Right.
to become giants in their fields,
Yeah.
highlighting the enduring power of the American entrepreneurial spirit.
It is inspiring to see
Is.
how individuals can have such a profound impact on the business world.
Yeah, it's pretty amazing.
Yeah.
He starts with Bill Gates,
Bill Gates, okay?
the co-founder of Microsoft,
Uh-huh.
and Warren Buffett,
Warren Buffett.
the legendary investor.
Legendary, yeah.
These are individuals who, through hard work,
Yeah.
innovation, and a willingness to take risks,
Got to take risks.
you do,
Yeah.
achieved extraordinary success.
And they represent that American dream
They do.
of achieving success
Right.
through hard work and ingenuity,
That's right.
which is still alive.
Alive and well.
And
Real.
okay.
And Lynch doesn't limit his focus to the tech giants and financial titans.
Okay.
He also features individuals like Roberto Goizueta,
Roberto Goizueta.
who transformed Coca-Cola into a global powerhouse,
Wow.
and Ross Perot,
Ross Perot.
who built a successful technology services company
Yeah.
from scratch.
So these diverse stories really showcase
They do.
that vast range of opportunities that exist across industries and sectors.
Right. Reminding us that the American economy is constantly evolving.
Always evolving, yeah.
With new industries emerging
Okay.
and old industries adapting
Yeah.
to those new realities.
Right, like he points to the resurgence
Yes,
of the American auto industry
that's a great example.
as a testament to the resilience of American businesses
Wow.
and their ability to adapt
Yeah.
to those changing market conditions.
It's encouraging to see
It is.
that even industries that face those significant challenges can reinvent themselves and emerge stronger.
And he does acknowledge,
Yes.
right, that crucial role of government policies
He does.
in fostering a favorable environment for business growth.
Yes, he advocates for a balanced approach
Okay.
that recognizes both the benefits of those free markets and the need for government intervention
Okay.
to address market failures and promote economic stability.
So it's this nuanced perspective
Yes.
that acknowledges those
Yeah.
complexities of the modern economy
Yeah.
and the need for those thoughtful policies
Yes.
that support both businesses and workers.
Absolutely.
And speaking of workers,
Yes.
Lynch doesn't shy away
No, he doesn't.
from addressing that issue of job losses.
He acknowledges that pain and disruption that job losses can cause for individuals and communities.
Yeah.
But he also emphasizes the importance
Okay.
of adapting to those changing economic realities and investing in education and training
Okay.
to prepare those workers
Right.
for the jobs of the future.
For the jobs of the future, yeah.
It's a reminder that while technological advancements can displace jobs in certain sectors,
Right.
they also create new opportunities.
New opportunities in others.
In others, yeah.
That economy is a dynamic system,
Always changing.
constantly evolving and
Yeah.
creating new possibilities.
Now, with all this talk of challenges and opportunities,
Yeah,
it's natural to wonder about the future.
of course.
How does Lynch view the
Ooh.
road ahead?
That's where his message really resonates.
Okay.
He concludes his book with a powerful message
Okay.
of optimism
About the future.
of the American economy.
Yes. He firmly believes that spirit of innovation,
Okay.
entrepreneurship, and hard work
Right.
that fueled American prosperity
For centuries.
for centuries
Is still alive and well.
alive and well.
Yeah.
It's a message that's both inspiring
Inspired.
and reassuring
Reassuring.
He doesn't sugarcoat those challenges.
Right.
But he also reminds us that we have the power.
We have the power
to shape our own destinies.
Okay, I like that.
So we've explored that historical context,
We have.
those dynamics of the market, the strategies for analyzing those companies, and the importance of adapting to change.
So important.
What are some of the key takeaways?
Yeah, what can our listeners take away from this?
Well, Lynch emphasizes that investing isn't just about getting rich quick.
Right.
It's about building a secure financial future for yourself and your family.
So important.
It's about making those informed decisions. Taking those calculated risks and staying focused on those long-term goals. And he encourages readers to develop a disciplined approach to saving and investing, starting early. And sticking to that plan.
Sticking to the plan,
Understanding the power of compounding.
Compounding is so important.
It is. And recognizing that time is your greatest ally.
Time.
When it comes to building wealth.
It's not a get-rich-quick scheme.
It's not.
It's a slow and steady.
Slow and steady.
Wins the race kind of thing.
Exactly.
Right.
He also stresses the importance of doing your homework, understanding those businesses you're investing in, and staying informed about those market trends.
But be active.
Be active.
Engaged.
Engaged, not passive.
Not passive,
And he reminds us that investing isn't just about those numbers. It's about understanding those stories. Behind those numbers, the people driving those businesses.
The people.
And those forces shaping those industries.
Shaping those industries. So
it's a holistic approach.
A holistic approach.
That takes into account both the quantitative and those qualitative aspects of investing.
All right, so it's not one or the other.
No.
It's both.
It's the whole picture. And most importantly, Lynch wants us to believe in ourselves.
Believe in ourselves.
Trust our own judgment.
And
have the courage.
Have the courage.
To pursue our financial goals.
It's a message that resonates.
It does.
With anyone who's ever dreamed of achieving financial freedom.
Yes.
Living a life of purpose and fulfillment.
It's a good message.
All right, so now we've explored those core principles of Lynch's investment philosophy.
We've laid the groundwork.
Let's get into those practical tips.
Yes.
And strategies. That he shares.
For finding those hidden gems that can supercharge your portfolio.
I like that.
Stay tuned, listeners.
Stay tuned.
Of our deep dive
into One Up on Wall Street,
where we explore those practical strategies
in detail.
Welcome back to our deep dive into One Up on Wall Street. We've explored Peterlynch's investment philosophy, those captivating company stories, and now, let's get practical. How do we uncover those hidden gems?
That's right. Lynch gives us these practical tips for researching companies and pinpointing those promising investment opportunities. He wants us to go beyond the obvious.
Explore those uncharted territories.
Yeah, where those hidden gems might be hiding.
So where do we start?
He suggests we start close to home. With companies we already know.
Familiar with,
And use daily. What products do we use? What services do we rely on? What companies are thriving in our local communities?
But tapping into our local knowledge.
Exactly. Recognizing that investment potential in those everyday businesses that we see.
Meeting our needs. Solving problems. It's like having a front row seat to those potential market winners.
So, for example, that new restaurant in my neighborhood.
Packed every night.
Could be a sign of a successful business.
With growth potential. Or maybe you see that local retailer expanding.
New stores popping up.
Exactly. That's another potential indicator of a company on the rise. It's about connecting those dots between our own experiences and the companies that are capitalizing on those trends.
So we don't need to be Wall Street analysts.
We don't.
To spot these winners.
No.
It's about being observant, connecting the dots in our own lives. What else?
Well, he also encourages us to pay attention to industry trends.
Okay, so what are those trends?
What sectors are growing rapidly?
Okay.
What innovations are disrupting traditional business models? What demographic shifts are creating those new markets?
Those are all good questions to ask.
They can really lead us to those promising opportunities, like the growing demand for healthcare services as the population ages.
Yeah, that's a good one.
That could lead you to invest in those companies developing innovative medical technologies or providing essential senior care services.
So once you've identified some potential investment opportunities, what's next?
Lynch says, Do your homework.
Don't just jump in.
Right, based on a gut feeling. He says we should be reading those annual reports, industry publications, financial news.
All those resources.
Yeah, to understand the company's financials, operations, and competitive landscape.
Okay.
He even suggests going a step further. Talk to the company's management team, visit their stores or facilities, try their products.
Wow, so really getting a feel for it.
Yeah. Go beyond those numbers, develop a qualitative understanding of the company's culture, their strategy, and long-term prospects.
Almost like investigative journalists.
He wants us to be informed and engaged investors. Now, once you've built a portfolio, Lynch provides some insightful advice on managing it.
Okay, good. What's his advice?
He emphasizes diversification, patience, a long-term perspective.
Don't put all your eggs in one basket.
Exactly. Spread those investments across different companies, industries, to mitigate risk. He also cautions against trying to time the market.
Oh, yeah, you can't time the market.
No, you can't.
Well,
Or chase after those short-term gains. Remember, investing is a marathon.
Not a sprint.
That's right.
So important, especially when the market is volatile.
It is.
Easy to get caught up in the frenzy.
It is, all those daily fluctuations.
But Lynch reminds us that building wealth, that takes time, discipline, and a willingness to ride out those market ups and downs.
He encourages us to develop a personal investment philosophy.
Okay, one that reflects your values.
Your values, risk tolerance, and financial goals. It's about finding an approach that you're comfortable with, that you can stick to over the long haul. And don't forget to stay informed about those companies.
The companies that you are investing in.
Monitor their performance, adjust your portfolio as needed.
Be an active participant.
Yes, in your financial future. And throughout the book, Lynch shares these personal anecdotes.
Yeah, I love those.
Reflections on his own investment journey, offering those valuable insights into his decision-making process.
He's been there, done that.
He talks about his early experiences as a caddy, observing those investment habits of wealthy golfers.
Oh, that's so interesting.
How those experiences shaped his approach. He even shares some of his most successful and unsuccessful investments, providing those candid insights into his wins and losses.
It makes him so relatable. It's comforting to know that even a Wall Street legend like Lynch makes mistakes.
He does. He's human.
And those mistakes, those are an essential part of the process.
Right. It's about learning from them.
So what are some of the key lessons that he learned?
Well, one of the most valuable lessons Lynch emphasizes is the importance of patience.
Patience.
He reminds us that building wealth takes time, and trying to get rich quick, that often leads to disappointment. He encourages readers to focus on the long term, to ride out those market fluctuations, and resist that urge to panic sell when things get tough.
It's a message that's so important.
Especially in today's world of instant gratification.
Yeah, we want everything now.
We do. We're so used to getting what we want right away. But investing requires a different mindset. It's about delayed gratification, playing the long game. And he reminds us that the stock market, it's cyclical.
It has its ups and downs.
Yes, periods of decline are inevitably followed by periods of growth. It's about staying the course, trusting that the market will eventually rebound. And he also encourages trusting our own judgment.
Okay.
And avoiding following the herd.
Which can be really hard.
I know it's easy to get caught up in the hype surrounding a particular stock or sector, but Lynch reminds us that those best investment opportunities, they're often found in those overlooked companies.
The underdogs.
The ones that Wall Street hasn't yet discovered. So be an independent thinker, do your own research, develop your own investment convictions. So, as we wrap up our deep dive into One Up on Wall Street.
What's the overarching message?
You know, I think he wants us to see that One Up on Wall Street, it's more than just a guide to investing. It's a testament to the power of hard work, innovation, and the belief that we all have the potential to achieve that financial success. It's a call to action. Become informed, engaged investors, not those passive bystanders.
Don't just sit on the sidelines.
He wants us to roll up our sleeves, do our research, discover those hidden gems that the Wall Street pros might be overlooking.
He makes you feel like you really can outsmart those big institutions.
He does. And remember, it's not about luck. It's not about insider information. It's about applying common sense, observation, and a bit of legwork.
It's about taking action.
As Lynch says, everyone has the brain power to follow the stock market. If you made it through 5th grade math, you can do it.
So for our listeners, what does this all mean? It means you have the tools, you have the knowledge, you can start investing intelligently. You don't need to be a financial expert. You just have to be curious, observant, and willing to learn.
Take Lynch's advice to heart. Start investing early, invest consistently, and invest in companies you understand and believe in. Most importantly, stay patient. Stay focused on those long-term goals.
And as always, we want to leave you with a final thought-provoking question. What everyday experiences or observations in your own life, they might be hinting at those hidden investment opportunities?
Mhm.
What companies are solving problems that you face or meeting those needs that you have?
Keep your eyes open, your mind engaged, and your investment spirit alive.
That wraps up our deep dive into Peter Lynch's One Up on Wall Street.
We hope you found it insightful and inspiring.
Happy investing, everyone.